Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, December 4th, 2019. In lieu of doing a closing market wrap video today, as there wasn't really any significant developments, especially since the update I posted this morning on the homepage before the market opened, I'm going to skip that and do a coverage of the semiconductor sector. From time to time, if I see a sector that stands out as potentially bullish or bearish, I will do a video covering either my favorite picks or the charts that stand out within the sector, as well, of course, as doing overview of the sector ETF itself. Or sometimes I'll go through all the components if there aren't too many. Before I get into that, let's just do a very quick update on the market, since I'm skipping the closing market wrap video today. Essentially we traded sideways all day. We gapped up but traded sideways all day. Very, very tight. We don't even see this kind of sideways price compression. Haven't seen that in a long time. Look at this, the 60-minute chart here, going back quite a while here. So very, very tight trading. And what I would recommend, if you didn't check it out yet, go to the homepage, and the first post I made today is the stock market correction over. My thoughts are summed up there. Pretty much I took that screenshot 2 hours before the market opened, and that's where you can see where QQQ was at the time. We're right about that's right about where we closed the day. So nothing changed, in other words, since this morning. You'll notice right now I've had to troubleshooting some issues on the site yesterday, so I have some new software right now for the charts. When you click on the single image charts, they're not expanding. I'm working on that. We'll have to get a programmer to fix that, or add some new functionality. I had to change out the software that if you have multiple charts, click on them, you can still then zoom and pan and do all that stuff on those what I call gallery chart images, more than one. Anyways, that's that. Take a look at that chart, and just to go back to where we were today. There it is. You can see all day, very tight trading range, and we were right about where I posted 2 hours before the market opened. That's where we were in pre-market. Went really nowhere, so nothing's changed there. That candle right there, ignore it. It looks like a gap backfill. That's in the after-hour session. Sometimes you get these wonky prints here, and someone maybe there might have been a fill down there on a gap backfill, but you can see when you see a long shadow like that on the candle, and then all the other trades are here, ignore it. It's just a single fill or a glitch, misprint there. But you can see what happened. QQQ traded in that tight sideways range. I had this line right here today, 202.37. We broke it right after the close, broke down and back tested. So we'll see tomorrow. If they can't get above that, then we'll probably get a gap backfill, or maybe that happens tonight. I still lean towards that downside scenario, but I can't, it's not I certainly can't make a very, a strong case or a high probability case to short. Although again, in the post I made this morning and what I said yesterday, certainly looks objective. With stops not too far above. I gave you some levels where the case for more downside would really start to chip away pretty quickly if we take that out. Okay, let's talk semis now. I'm going to go here. We're going to start out on the longest term time frame. I'll do a top-down approach. Sometimes I like to do that from a technical, meaning charting perspective. And there are three main popular semiconductor ETFs out there: XSD, SMH, and this one, SOXX. They just track different baskets of semis or different ETF companies. This one happens to track the PHLX SOXX semiconductor sector, and the PHLX has been around. The PHLX SOXX semiconductor index has been around for many years, decades actually. It's the original, and so I like it for that fact, as well as the fact that it also it's the same exact index that the very popular semiconductor leverage ETFs, SOXS, which is the short, SOXS, and then XOXL, 3-time leveraged, again, so they track the same index, but these guys, you don't want to hold them for a long period of time, especially during choppy or sideways markets when the semis are consolidating. And of course you don't want to hold them against the trend for too long because of the 3-time leverage. But let's just focus on this one. Alright, so by a top-down approach, I'm doing this because right now the charts are what I call stacked. And what I mean by that, Well, as you probably know, I like to use various time frames. You know, the monthly charts, which we're looking at here. Every month, every candlestick represents 1 month of trading, and we're going back all the way back to this one started trading back in 2001. Plenty of price history. And this paints the bigger picture, shows us the bigger trends, bull and bear markets within. This is what you call a secular bull market right here off the 2008 lows. And even within there, these are all, they might not look like it, but these, if you want to use the standard definition of a drop of 20% or more off the highs as a bear market, well, then you're looking at several bear markets in here. Now, really, because the semis are so volatile, I wouldn't consider those bear markets. I'd just call them corrections within there. But again, they are well into the double digits. Most of those are over 20%. But again, you can see the primary trend right here. And so now, by saying the charts are stacked, what I mean by that is when I go down from the monthly, then I like to look at a weekly chart, then a daily time period, and then down usually to the 60-minute chart. You can go down lower. There's shorter intraday periods, of course, but by saying they're stacked, it means that on every single time frame, there are either clearly bullish or clearly bearish developments. Now, let me be clear. Like the stock market, the semis are in a bullish trend. They're in a bull market. They're in an uptrend right now with zero sell signals. So we'll be clear on that. Now, that doesn't mean that there aren't bearish developments in the chart, because that there are, and that's what I'm going to show you. And I like to get these videos out in advance. I know I've covered the semis and I've talked about pullbacks and corrections for, coming for years, and there's been drops in the last last couple of years, 2 drops measuring well over 20%, or right around that. I'm sorry, that one was about 20 right there. That one was over 20%, and again, that comes just in the last couple of years here. All right, so please don't ever confuse potential bearish developments or bearish setup with an actionable short trade. There's a big difference, because why? One of two things. The bearish developments such as divergences, overbought conditions, things like that can and often do last for an extended period of time, sometimes much longer than you think before they play out. That's number one. Number two is sometimes they don't play out. Sometimes you have overbought conditions that just, the security just kind of maybe grinds higher, grinds sideways, and then continues another leg up, may burn through divergences. So remember, divergences, bearish developments, things like that are not sell signals, but they are, hey, get ready, but that's our next setup. And I like to get this one out in advance because the one thing about these, I'm going to show you key levels on each of these when I go through the components, and I'll do that rather quickly when we get to the individual stocks, because what I've done is I've color coded the most important levels on each stock, and just with one or two levels. So then you can go through those, and the point being is if and when we have the sell signal the breakdowns and the sell signals that I'm going to first cover on the sector itself right here, if they trigger, you'll have all the semiconductor stocks in this sector. I think it is, well, I can tell you it's exactly 31 stocks we're going to go over. No, 30 stocks. So 31 is including SOXX here. And so basically the odds will increase substantially if you have the majority of the stocks that I'm about to cover also break down. So in other words, we may get a whipsaw signal, SOXX could break down, break support, break a trend line, and then whip back up. There's been a couple trades over the last year that I took shorts on the semis. Some we had, but most were stopped out. Stopped out for relatively small losses, and I moved on. But at this point in time, like I said, there's setups that I think the risk reward and the profit potential in this sector is well above average, much higher than trading SPY or even QQQ, which is tech heavy, or a lot of other sectors out there. So that's why I'm spending the time to do this. Okay, let's dive into the charts. You can see on this weekly chart, yes, here's your primary bull market uptrend line off the 2009 lows, this lower line right here. And then you can see within the bull trend there's uptrends, and you get a breakdown. Sometimes you sell off right away, and sometimes you back test. So back here you had a breakdown, back test, and then the correction. Here you broke down, just a correction. Here you broke down, straight correction. Again, all these are double digits. Many of these are 20% or more. Here you broke, back tested for a while, then you corrected, and that was a couple years. That was about a year of bearish price action. There was also divergence there. It's not marked on this chart right here. You had negative divergence up to that high as well. Nice uptrend there, breakdown, back test, then the correction. So you can see that's my point, is sometimes you back test, sometimes you don't. All right, there's a wedge right there right now. So this on the monthly time frame, this is a trend line I'm watching. These are monthly candles. You get a solid or a monthly close, especially a solid monthly close below that. I believe it takes us down to this uptrend line here. I think that would be a pretty powerful sell signal. From where we're trading today, depending on if and when we get there, that would be a drop of about, we don't know exactly how far, but we do know stocks tend to fall faster than they rise. Not always, but quite often. And that would take us down about 28% from where we're at right now, just to the trend line. And remember, that's just to keep the bull market intact. If that bull market trend line breaks, there's a whole lot more downside to come. So that's what it looks like on the monthly. Now I'll just go through here. On the weekly chart, you can see we have the same thing. Shows a little better here. This was our last divergent high right there with a nice, fairly clean trend line. One little whipsaw below it, and the drop, I have to go to the right here, the trend lines move, is a 30% drop. So it might not look like much, but you take 30%, or I'll take 30%, or even a good part of that, even half of that all day long on a swing trade. And again, you can see the other thing to note is here, let me turn these lines off. How long did it take? We dropped 30% in 3.2 months or 14 trading sessions. The pop-up box at the left shows me that. And we wiped out at that point in time, it wiped out in those 14 trading sessions 1.3 years of gains, roughly right about here, which is about 70 trading sessions. So there's the example of why, how stocks tend to fall faster than they rise, and also why I do these videos in advance in case, we get sell signals and maybe I'm scrambling with 100 other things going on, and I get sell signals or price alerts on a lot of the stocks I'm about to cover, all breaking down, because that's what tends to happen. If I set alerts on every stock that we're going to have, that I'm going to cover here, I can assure you that when the sell signal comes, when the semis break, I'll have, I probably have a dozen or more going off either in a single day or certainly within a few days. That's how it works. Birds of a feather flock together. These semis will tend to move in concert when it finally breaks. And again, then you have to have your ducks in a row. So let me turn these lines back on. And so the levels to watch as I zoom in tight, right here. Nice, well-defined uptrend line. This is a weekly chart we're looking at. And again, to point out that divergences do work. We had the divergence right here, and that drop, again, I'm grabbing the top of that candle roughly, going down, before said and done was about 30% there, 28%. Here was another divergent high right there, and we had a relatively swift drop. It looks like it happened over about a week, or 5 candles or so, about 21%. And now here we are again. And remember, the divergence that started at that first 28% or so drop has only been extended. It has not been taken out. Normally you get that correction in a bull market, divergences get taken out, you're off to the races on the new uptrend. This to me is more ominous, much more ominous, potentially bearish than it was back here or even at this point. And those were double digit, 20-28% drops. So if this trend line breaks, and you just take a simple measurement, if you look at a rising wedge pattern, if you take the widest part of the wedge, like right here from top to bottom, maybe right about here, and you add that to where the wedge breaks down, that gives you a measured target. And I'm just eyeballing it there, but I think that could take the semis down here. That'd be about a 35% drop. Again, no sell signals, but when I look at this, I see the PPO starting to turn back down. Here's your PPO line, poised to make a bearish cross. Remember, we had that on the daily chart on QQQ lately. This is a weekly chart. So what I want to see on this weekly, I want to see a red candle down below there, a solid weekly close, or a big intra-week drop that has little chance of recovering, bearish crossover, and again, a weekly chart sets the tone for a swing trade that can last for months, even years. So that's what we're watching there. Now you get a head start or jump start by trading off the shorter term time frames. you have a higher chance of getting a whipsaw signal, but you get a much earlier entry. If you, let's say the semis broke this trend line right here, this is the level right here, this yellow trend line, which we're dancing on now. Let's say they broke it on a Monday. Well, I know the sector. I've traded it many times. It can be down 10+% by the end of the week easily. It's done that many times. I mean, here's a drop right here. I'll just measure it out for you. There's a 10% drop right there, and that occurred over. I missed it. I got to grab right there. Sometimes it's hard to zero this in. My mouse is rolling around. There it is. 5 bars. 5 days. You dropped about 10%. What's my point? Well, again, if you break down on Monday and you wait for the weekly candle, well, you may have already missed out on a 10 or even larger 10% or larger move. And so again, you can get a head start here. Levels to watch. The rest of the charts I've color coded with blue, the important levels, but here I'll just tell you, it's this uptrend line right there, very well defined. That's why I'm doing this video. That 220.34 level. So those are the ones to watch, and if I don't already have an alert, yeah, this is where I had it. I'm going to leave it right there. I'm going to set a price alert there, and I'm going to set a price alert on this line here. And once those two go, I'd have a pretty high degree of confidence we're going lower. Now, as I said, no sell signals yet. An uptrend is an uptrend until it's broken, and support is support until broken. So what we could do is we could continue to work our way up within this wedge. And this is only a divergence line, so this line could also be extended in case we have maybe a blow off top in December or January. But it won't change this. We get that, I'll still be watching this trend line. So I'll do this video today. I may follow up on these stocks tomorrow or 3 days from now, or I might not follow up again for a couple weeks or maybe even a couple months if we do that. But I'll certainly keep an eye on this trend line because it's very valid. And again, it's these divergences that I've showed you already on the monthly, weekly, and now daily chart, all telling me the same thing, that the semis are poised for a potentially big correction. We just need the sell signals now. And again, the common theme is I'm going down time frames here. We're on a 60-minute chart. Let me zoom in. And I didn't color code these yet, but we already broke down on the 60-minute. Here's that trend line, a lot like QQQ. We had a divergent high. Here's my negative divergence lines right here on the PPO down below and the RSI. That gave you negative divergence. We came down, we hit the trend line, we bounced once, and we broke it. And then we broke this 229.68 support. So on the 60-minute chart, I already have the semis on a sell signal. This was a breakdown. They came up, and it's roughly a back test right now of that 230-ish level. They could go up and punch up and back test again. If they do much more than that, they've regained the trend line, and it's going to foil these sell signals, and maybe they go on to make another marginal new high, divergent high. But as of now, you have early sell signal on the 60-minute chart, but again, not the daily. And the thing about this stock market, it's been at least a trend in the last few months, and really this bull market in general, one of the most resilient, certainly the strongest and longest bull market ever, or at least the longest, not the strongest. I take that back. The one leading up to the dot-com bubble in 2000, the S&P 500 had a larger gain than the current one, but it is the longest, and it's been very, very resilient. So where am I going with that? A lot like a prosecutor in court has a burden of proof to prove that the defendant is guilty beyond a reasonable shadow of a doubt. That's how it goes in. When shorting this market, when shorting the semis, with things being so resilient lately, you need to give it the benefit of the doubt. You don't jump the gun on the first sell signal. You don't jump it on that 60-minute chart. I'm talking for positioning for a swing trade. You want to see this trend line break, and now everything else I'm about to roll into. So I'm going to go into these a little bit faster. I'm not going to go over multiple time frames on the components. I'd love to, but it will take too long. You can just take my word, and I've covered these in the past, and those charts haven't changed much. Quite a few of these look just like the sector with divergences going out on the weekly and even monthly. So we'll stick with the daily charts, and from here on out, keep it very simple. Any line that's colored blue, that is the salient or the most important level that I think there is to watch on those stocks, on these stocks, that will trigger a sell signal. And again, if Intel, for example, here when we're starting with, broke this trend line, but none of the others have broken down within the sector, and more importantly, SOXX hasn't broken down, you might want to hold off on that short. It could very well play out. It could certainly play out, but you want to put the odds in your favor, especially with this resilient trend we've had in the market. Set alerts or just keep an eye on all of these charts, and if you start to see them break down, and it's like popcorn, you have one alert going off after another, then you know, hey, the semis are breaking down. You might want to jump in there quick, get a starter or a full position, set your stops, and and then I'll of course follow up if I don't have price targets and any official trades out. I'll do my best to follow up as soon as possible on that. Now, so when you look at it, it's wedging higher. We have what I could see happening to Intel here. I'm going to draw out a scenario. I could see it inching higher. Now, it could break down tomorrow. I don't know. That's why I do these videos in advance. But I could certainly see it also, especially if the market continues higher, working its way up within this wedge, just like I showed you on SOXX. Doing so would give us negative divergence. It would help to make a case for a short on Intel, but you don't have to have divergence. It's not a requirement for highs and lows. Here, you didn't have any negative divergence right here at this high. You broke this price channel, and then boom, big drop from Intel. From the point you broke below the price channel, Intel fell 11%, and it had already come pretty good off the top there. So there's an example. You don't have to have divergence, but what it did have back then, as it just did recently, you can see these circles here, it was overbought. Overbought meaning the RSI was 70 or above, the red level right here, the red line on the RSI. So you can see right here we had negative divergence right there, overbought, and here's what happened then, here's what happened then, here's what happened then, and this is what I think will happen now soon. That's Intel. Alright, we're going to go through a little quicker. Taiwan Semi, you can see the circles down here, RSI overbought. This is, again, trading, I always say, is all about probabilities, looking at past patterns, because, like I say, history doesn't always repeat, but it often rhymes. Overbought, daily chart, overbought, 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 but we haven't corrected yet. What is that? 2 years right there. 2 years of price history, every overbought reading without fail. The corrections didn't come right away. At best, if you can align it. Overbought, I always say, and divergence as well, is not a sell signal, but it is a heads up. Get ready. A correction is likely coming. Your sell signal comes on a break of a support level, a bearish chart pattern, something along the lines. These trend lines here, this one was overbought. You had a breakdown back test, and boom. If you're wondering how much, if you shorted the back test right here, you had a 17% short on Taiwan Semi. If you shorted the breakdown here after it was overbought, before all is said and done, the stock dropped 23%. There's my magic level right there. Don't put too much stock in any one chart or any one stock, but again, it's watch the sector as a whole. About 52, I see nice support. I see a breakaway gap right there, or at least, what could be an exhaustion gap. Big gap. We back tested the gap once. That should have been off to the races after the first back test, but we didn't. We came and back tested it again yesterday. See that red candle? Looking a little weak after the breakout. You can see this, it's a potential divergence line. So just like Intel I showed you, should the semis go up more, I'm not going to forget about them. In fact, I'll very much be watching to see if we put in a divergent high and then go on to break that trend line. Where does Taiwan Semi go? I think at least down to this trend line here at minimum, and that would be from where we're at today. That's a drop, depending on when it gets there, about 11%. And again, that's at minimum. So that's one, and again, that's the level I'm watching. There's another overbought level I didn't even get to before. All right, next one up. I'm going through these, by the way, on my watch list on another screen. I'm clicking it in order of market cap. So Intel was the largest semiconductor at $255 billion. Taiwan Semi is the second largest at about $187 billion. Now we're down to NVIDIA at about $127 billion. NVIDIA, I don't have a blue line here. Why? NVIDIA already broke down. If SOXX had broken down or does break down, I would short NVIDIA right here. I'm not shorting NVIDIA because SOXX is still above trend, as are the majority of these stocks, and that's again the point of this video. However, you asked me where I think it's going. Negative divergence. Failed. We had resistance. This was a former price target I had before in a short trade from here. We popped it, failed the breakout, then we broke the nice clean up trend line, and we back tested today. But you know, if the semis continue to grind higher, we can continue to back test, or this may prove to be a whipsaw. But there's one to watch. And again, I don't have any blue lines because it's already broken down, and I think it's coming at least to this level here, 188.54. That would be a drop of better than 10-11% if so. AVGO, Broadcom, there's a blue line. Not crazy about that blue line, you know, the chart, but again, that's the level I think would do the trick. But I'll tell you if I have higher convictions on one versus another. Negative divergence, by the way, as well. Oh, and also, you know, not to forget, you had a high I should put right here, previous all-time high right there, had a failed breakout recently, and couldn't get through that level. So there's AVGO, Broadcom. TXN, Texas Instruments. Yeah, not one of my favorite for short, but there's a level that I think will do the trick, about 117-ish. You can see right there. It goes back for a while. It's a trend line that I've had, or a resistance line back for a while. So that should do the trick. Plus, it'll drop us out of this recent consolidation period, and that in itself should be bearish. So, you know, bullish if the stock can hold the level and break to the upside, whereas bearish if it goes to the downside, and that'd probably be my first target. I'd have to study the chart a little more. Qualcomm, QCOM. Sorry, guys, trying to talk fast. Get this over with. I'll get all the stocks, I should say. I talk about these all day long. I'm fine, but I want to get all 30 stocks in here. Downtrend line, very steep. So plus we're at the uptrend line right there. So this one goes one of two ways. Big negative divergence. So I do think that trend line, that blue trend line goes. It's just a matter of when, because we haven't tested in a while. I could easily see a bounce, and if you break above this uptrend line, you could get another thrust up within this wedge. Maybe all the way to the top, maybe not. Either way, this is the trend line that I think will do the trick. That's the one I'm watching. And there's also a pretty nice price support level just below there as well, just below the lows, about 80.38. So that's a pretty big level and a pretty important stock. So there's Qualcomm. ASML, my blue lines are all the way down here because why? This one's already broke down. And that's the theme here. Quite a few of these semis have recently broken down, and where normally I would take them as shorts. They look like nice shorts, but again, the sector, as long as the sector holds up, you have money flows, inflows into these semiconductor ETFs, and that in itself causes buying into the components. So it's really, you're trying to swim against the tide if you're shorting stocks in a bullish sector. So there it is, breakdown back test, but I think when it takes out these two levels here, 251.74 and that uptrend line, that should open the door for probably a move all the way back down here at about 218 or so. AMAT, I talked about these recently, KLAC, Applied Materials, some of these are chip equipment makers. So if the semiconductor stocks, which they are the canary in the coal mine for the tech sector as a whole, then the chip equipment makers are the canary in the coal mine for the semiconductors. So these guys make the machines and the equipment that the chip companies use to make chips, and so when their sales start going down, it's a tell. It's a tell that Intel, for example, and Texas Instruments have, they're not ordering as much equipment. They see a slowdown, so they're kind of tightening their belt, and so you want to watch these guys. There's a nice clean up trend line on AMAT. There's also negative divergence, just as there was back here at this point, right before the stock fell 16%. That was a very small wedge back then, and divergent high. Big divergent low right here, and you can see that divergent low that I had marked here, was a catalyst for this whole rally that we've had so far. But this trend line, it's getting a little, or the rally itself and the trend line, getting a little long in the tooth. I would set a price alert there. Yes, I will. I'm going to also tell you this is a big level if that trend line breaks, to watch that. And if that goes, that should put the nail in the coffin. MU, Micron, I didn't put a color code here because we already broke down. We broke and back tested. Again, common theme. But you know what? I'm going to give you a level here to watch. We broke it the other day, but we snapped. Well, we didn't break it. we close right on it. See that candle? It's a doji. You have to zoom in so tight. Intraday doesn't matter on a daily chart. That's why I say you want to see a daily close if you're trading on a daily time frame. Broke intraday, but look where they snapped it. That's not coincidence, not at all, in my opinion. That's a pretty well. I've had that support level on this chart for a while. Let's see that line created. Well, I just changed the color, so it updated today. But I created that line back on March 2nd, 2018, and it's been a level on Micron for quite a while. So that's the level I think will do the trick. Look for a solid close below there, and again, it's already broken down below trend. And it's not really falling because again the sector's holding up right now. AMD, I don't have any key levels here other than these yellow. I already had these lines yellow. I just left them that way. There is a trend line you can see right there, but it's already been sliced through, so I didn't color blue. I don't think it's as important anymore, but we already broke this trend line. That to me is important. So here's yet another leading semiconductor stock that has broken a well-defined trend line and is still below that trend. In other words, another way to say it, it's been in a near-term downtrend now since what was this November 19th, and it bounced off that trend line. So keep an eye. And I think if 3484 goes, that should probably do the trick to trigger a deeper sell-off for AMD. ADI analog devices, blue trend line right there. LRCX, Lam Research. First this one, there's a trend line, and then this secondary trend line right there, and that should do the trick for Lam Research. NXPI, I have two trend lines here. This one off the December 24th lows. I think that's very important, but I put a BOD or benefit of the doubt trend line there. It comes in and catches all these candles back from late May, and that should do the trick on that one. And you can see, again, common theme. Negative divergence been building for quite a while on this one, and we just need that catalyst. We need those sell signals. KLAC, again, I mentioned this one I think last week or the week before in the trading room or on the front page. One of the leading semi-chip equipment makers. Back here, remember, when the divergences were there, I highlighted strong bullish divergences were the catalyst for this rally. Divergent high correction. So that's wash, rinse, repeat stuff. Divergent high correction, divergent low right here, rally, divergent high correction, simple stuff. Divergent high, which again, we had divergence here, we had it here, we had it here, we had it finally at that last high, and none of those were sell signals, but what was a sell signal was a break of the trend line. The primary trend line's in white, that did it. I had a BOD trend line there, boom, we gapped down below it, and it's in a downtrend, it's correcting, and I don't see that correction to be over, especially considering the scope of these divergences and how long this trend line was. This last drop with a little wedge, smaller divergences, ended up with the stock falling about 21%. So far this one's only down from the highs about 13%. And I think at minimum this target down here, 144, from where we're at, especially again if we get confirming sell signals on the rest of the sector. Xilinx, I wouldn't. This one I'd rather be long than short. Look, bullish falling wedge, positive divergence, probably the best looking semi in my opinion. Now, if it breaks out, it's going to have a hard time if the sector breaks down. So take that for what it's worth. But if you're bullish, looking for trade ideas in the semis, this is one. There's your trend line. Pop above that would be a buy signal. And then, of course, next objective, first target would be 97.58 or just below it. And then a break above that would also be bullish. Now, this one could continue to work its way down and still keep these divergences. Wouldn't surprise me if it did, but I just want to point that out. That's why you don't have a blue line there. That one I don't care to short. MCHP, I should have color coded this line that way. I don't know why I didn't. That's the benefit of the doubt trend line right there. Not my favorite. When I say that, there's a lot of supply right here, a lot of trades. I like stocks that have thin zones. I could sit here for probably talk for 30 minutes as why this wouldn't be my favorite one, indicators and all that, but there's a trend line to watch. Again, the point of that is just if that trend line breaks and a dozen others that I'm covering today, these blue levels break, whether they're horizontal price supports or uptrend lines, then you have a pretty good chance you're going to get a swift correction in the semis. Skyworks Solutions 94.86 horizontal price support. Marvel MRVL 2274, MXIM, Maxim Integrated Products, blue trend line right there. QRVO, I don't see anything in here to anytime soon that would trigger, other than short of a huge bearish engulfing candle or something. I don't see anything. That's a big pop-up. There must have been news there. I don't know if it's a takeover candidate or what. TER, Teradyne, blue BOD, benefit of the doubt trend line. I don't have it as bright as the other ones because I'm not so crazy about it. But this was really the trend line to me. We had one little whipsaw there, and so this one's actually already broken down. That's why I had that color down a little bit. Breakdown, back test, and it's working its way down. And if it didn't have such large divergence at the recent high, I probably would dismiss it, but I think this one heads lower. You can see my first couple targets right here, and if that second target's hit, which is my preferred target right now, especially if we get a sell signal in the semis, you're talking another 19% drop from where we're at today. ON on semi, yeah, that's probably the key level right there, about $20, that blue line there. There's an uptrend line as well you want to watch. If it breaks that uptrend line, that would be bullish, as well as this level here. So again, if you're bullish on the semis and you're looking for ideas, no, I meant to turn on the value, show you that level. Pop of this trend line, but I would hold off until 2226 is taken out. Otherwise, resistance is resistance unless taken out, like I like to say. So one could make a case for an objective short here. Again, it would help to have the semis confirm. And that would be your next objective short entry or add-on would be on a break below $20. MPWR, there's a level. I've only got a few more, half dozen more. I know this video is going long, guys, but I wanted to do this to do a comprehensive overview of the sector. ENTG, there's a trend line plus 45.41. That one I think falls pretty quick and down to about $40 if and when that level gets taken out. That's just kind of eyeballing. I'd have to sharpen my pencil on those price targets. MKSI 101.43. And remember, as I'm getting down here in the last few, they don't move the needle hardly at all in the semis. This is a $5.7 billion company. Once again, Intel was a $255 billion company. So it takes a lot of MKSIs to equal one Intel. And so it's all about weightings in the sector. So again, this guy could drop 50%. If the rest of the sector is holding up, it's not going to really affect the SOXX ETF. But they are trading ops, and they're also, again, indicative of what's going on in the sector. That's why I covered these levels. Cree needs to hold that 41.43, or it's looks pretty thin below. Look out below. There's also, I don't know, I wouldn't short Cree. If it breaks below, you could get a whipsaw signal, and there'll be, if so, you'll have positive divergence. So, and then it could go on to break this trend line. So I just want to say it's a level, it's support. It could open up more selling. It could take out the divergences, but not one that I would short. Just would rather let that one go. SLAB, I don't have any big levels. Cirrus Logic, CRUS, no, I don't see anything other than this trend line, but we're well above it. And yeah, there's some support right here, about 68.44. That should do the trick to get us down to the trend line. And CCMP, Cabot Microelectronics, there's a level. We danced below it yesterday, got it back above it again, about 125. I think below there the stock drops. SMTC, I don't see anything on that chart that stands out. And that's where we started, SOXX. Okay, long video. Hopefully I didn't talk too fast. I know I try to get all these through there. It's not easy to cover, do a comprehensive review on multiple time frames on the sector itself and then go through 30 different stocks. But again, you can pause the video, play it in slow motion if you want, rewind, and I recommend to pick your favorites out of there and set price alerts, and whether they trigger tomorrow or 3 months from now, I think there's some above average gains in this sector, and that's why I continually from time to time will update what I'm seeing in the semis. Alright guys, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.